Hello and welcome to this edition of the weekly video market update from Orbex.com. Everyone, this weekend we're busy covering the biggest cyber attack in the history, which basically compromised a lot of businesses around the world, more than 200,000 businesses, which also has raised a lot of questions and red flag about the security of the global market exchanges around the world. However, the good news is that the global equities has ignored such news and most of the indices are green on the day. Yet, this doesn't mean that the attacks are over or that even the market might not get hit or might not get the hit over the next few days. The coming days and weeks might also lead to some fears toward these attacks. In return, we might see some sort of a decline in some of the equities. In Germany this weekend, Angela Merkel party scored a big win in one of the most populated states in Germany, which also seen as a rehearsal of the upcoming election in September, which is likely to give Angela Merkel the key for her fourth term in the government. The French election is also considered as, of course, the biggest or a big victory for the European Union, and Germany upcoming elections is likely to be the same, which should also increase the level of confidence and trust in the European Union and likely to keep the fears of the euro breakup very low. In return, this is why the euro has been shining since the beginning of the day, trading above the 109.60s earlier today, nearing its resistance area, which stands at 1.10 for the time being. However, the question remains for the time being is whether the euro will be able to close the trading gap, the one we've seen for the past 2 weeks, or right after the first round of the election in the French election. And actually, nobody actually knows for the time being, and nobody can even tell. But as long as the euro continues to trade above those solid support, which is 108.60s, I doubt that the euro will be able to do so. On the other hand, also after a few economic releases last week across the week, this week comes with many economic releases and events which likely to have a notable impact on the market. But we will be watching many economic releases from the States, especially after last week's disappointment on Friday, which pushed the US dollar even lower once again, as June's rate hike odds is now below the 80% once again. This week we'll be watching also the UK inflation and the jobs report from the UK. We'll also be watching the UK's retail sales, especially after the disappointment of the GDP of Q1 of this year. In addition to that, also from Japan, we'll be watching the GDP and Australia's jobs report. Finally, another inflation data set will be released, but this time from Canada, which is likely to have an overall impact on CAD pairs, especially after the recent weakness for the past few weeks. Of course, it's also amid the fluctuation in crude oil prices. So this is what I want to talk about at the beginning of this video. And now let's have a look at our usual technical charts. Beginning with the US dollar index as always, and it actually continues to trade lower. And last week we had almost closed the gap, which was around the highs of 21st of April, around the 99.97, or the highs, which is a 100. We almost tested that level last week, and since then, on Friday and today, Monday, we had a huge decline all the way back down to 98, below the 200-day moving average again. This might be one of the things that why even the US dollar right now is going back lower, because it seems that the gap is already filled, and now almost most of the technical indicators are also pointing to the downside, which basically that opens the way for further declines ahead, and probably we're going to see another leg lower in the next few days, possibly toward the next support area, which is 98.40, 98.43, which should be watched very carefully, as a breakthrough that support would actually opens the way for further declines ahead. As for the euro, which is still hasn't filled the gap again at the same time, and it managed to break all the way down like during Thursday, Friday, like Wednesday and Tuesday, Thursday, all the way to Friday. But on Friday we had a huge move to the upside due to the US economic releases, which came in also worse than expected, and actually showed a very clear sign that the US economy is slowing down, which basically means that the Federal Reserve might not be able to raise rates in June of this year. At the same time, over the weekend, we had a very good news from Germany. The Angela Merkel party has scored a very big win in one of the most populated states in Germany. So that's one of the things that actually pushed the euro even higher at the beginning of this week. Right now, we'll be looking for another test of a 110 and even the 110.23 to be looked at in the next few days. Now, switching to our also the weekly for the New Zealand dollar, it's still within the same area, still within the same levels. I tried to break below the 100 week moving average last week, and actually managed to get some support from the same level that we had back in November of last year, and it continued all the way back up from it and closed actually the week slightly lower, but still hovering around the same level, which is the 200-week moving average. And for the time being, it's still unclear what these currency is going to do in the next few days. I still believe that it's much better to stay away, but for the time being, still the rallies are still in control for the timing. So I guess this week we might be looking for a test of 74.90, and we might see some sort of like sellers right now, like at these levels, especially that technical indicators are also heavily oversold and crossing a little bit to the upside. So we might see some bounce. That's sorry for the Aussie. As for the Kiwi is also has almost the same story. Sellers are still in control since nothing has changed actually for the past few weeks. Nothing has changed. We're still within the same level. Right now we're hovering above the 100-week moving average, which also should be watched very carefully. The support area remains at 68.77. No big change for the timing. I would possibly stay away from these currencies for the next few days, at least to see what's going to be or how it's going to be in the next few days to confirm whether it's going to break down or up. But for the time being, I'll be interested to short 69.42. Going into the Japanese yen. Japanese yen managed to also break above its 100-day moving average finally, and it continued all the way back up, trading around like a 114. But since then, we've seen 2 days in a row. Thursday and Friday was all the way back down, and now Monday slightly higher. However, the most important level to watch this week is the 100-day moving average is 1297. Why it is important also because most of the technical indicators are heavily overbought, and this might be the time where we can see more and more in downside, possibly toward the 1297. A breakthrough that support will clear the way for further declines all the way possibly toward or to retest the 1164, which is also a confluence between a support level and also a retracement level, just 32, and also the 50 day moving average. Going forward into also the British pound, which also opened the gap slightly lower and then covered the gap at the same time. This is still very strong for the time being, despite the fact that the Brexit negotiations likely to be very tough over the next few weeks. At the same time, we're still having the same support area, which should be watched very careful, which is 27.82. Keep an eye on it. But on the upside, we'll be looking for a possible test of around like the 29.50s all the way. Again, we're almost there at the end of this day. So at 129.50s, followed by also there's a possibility of a retest of 29.89, which is like 130s, also a very high possibility in the next few days. But watch out for a breakout above those two levels. Gold and silver. Gold, again, as I said last week, I'm still positive on it despite the fact that we broke through the trend line, but at the same time there's still uncertainty in the market, uncertainty in the global economy, so that's why I'm still positive on gold. We actually made it above the 100-day moving average. That's pretty good. That's pretty positive, but at the same time we still need to break above this area, which is around 1247, where we need to see a break above that resistance. So far also technical indicators are supporting the idea of another bull run in the next few days. So that's why I'll be still interested to buy gold, even though that stop will be even below last week's lows. Silver has also the same story, but silver is outperforming gold in most of the time, especially with during the declines. But for the time being, it is still unclear actually on silver, but I'm still also positive that we might see another run over the next few days. But at the same time, we need to break one of the levels that need to be watched, which is the 1682, which is today's high, and a break above that resistance would lead us to another run all the way above 1732. But of course, I need to see gold and silver need to prove themselves again, and to see more upside above the 1770s to give us more and more indication for another bull run ahead. So this is it for the week. As always, please, if you have any questions or comments or any feedback, please leave them below this video on YouTube. Thank you for watching. I'll see you once again next week. Have a good one.